Hey everyone, Colin Tedards here. And again, I want to piggyback off of our last video where we started to look ahead to 2024 and start to look for like the best ways to strategize as we head into the new year. And oftentimes this time of year, I start to look at the sectors that didn't perform this year, but are probably set for a rebound sometime in 2024. And today, I'm really confident the three sectors I'm going to be talking about today are set for a breakout year. Now, obviously, nobody has a crystal ball, right? Nobody knows exactly what's going to happen next year, but I am confident that the Federal Reserve is done hiking interest rates and we should see a reversal by the spring of next year. That's my macro thesis, at least from an interest rate perspective. And until I see data that proves otherwise, that's the direction I think things are heading. And yesterday, we got a view of inflation that didn't really change the expectations heading into next year. Currently, the market's expectation is for several rate cuts beginning right around the May timeframe. And so, one sector that has struggled this year, but would really benefit from rates dropping, are dividend stocks. So, think about it. Investors who have to rely on income, like retirees, they were forced into dividend paying stocks as the Federal Reserve kept rates near zero for as long as they did, for like 2 decades. Now, with money market funds and other types of funds like that earning 4 or 5% or more, buying into like a dividend stock or a fund has actually made far more less sense over the past year. And we can see that in the performance of the popular Schwab Dividend Equity ETF. It has a ticker symbol SCHD. It has underperformed the broader markets, being down about 5% over the past year. Depending on how much interest rates fall in 2024, dividend stocks could be set for strong inflows next year. Now dividend stocks, they're going to be your safe bet for 2024. Even if rates stay the same or they rise even a tiny amount, you should still have decent return and you're still going to get that dividend payment. But the next pick I have is for investors that want to take some real risk. That's because this sector has been decimated by higher rates. As investors are fleeing to like the safety of mega cap technology and even money market funds. In fact, this sector is responsible for the two worst performing stocks in the S&P 500 over the past year. This stock and this sector is the solar industry. One stock is Enphase Energy, the other is the worst performing stock, SolarEdge. Clearly, higher interest rates have slaughtered the solar industry. That's because installs of solar are often financed, and the near 0% interest days, that was when the solar industry soared, when it was basically free to put this stuff up. That's where things get exciting. If you get a meaningful reduction in interest rates next year, the solar industry is set to benefit. In my opinion, the solar industry is a very, very risky bet, only because interest rates would need to fall quite a bit. And there's always political risk as well, which we'll talk about some other time. But the risk reward setup is there, and it's an interesting one. Now, finally, for those looking for high upside, maybe not as much as solar industry, but a very simple way to play it, this next pick is for you. It's actually a sector I've written quite about in my newsletter, and that is small cap stocks. With rising interest rates, clearly investors just had no patience over the past year for no profit, hope and dream type companies is what I call them. Now, back in September, based on technical analysis and our interest rate thesis, the Russell 2000 index was actually starting to flash buy signals. I believe small cap stocks continue to rally into 2024 as the excitement of earning 4% in a money market fund, it's going to pale in comparison to what the small cap index can return in just a good year. Now, immediately I was a bit early, but since then, the IWM ETF, which I recommended, has rallied over 11% in a single month. That's because the best investors are always looking ahead, making an educated assumption about the macro environment and applying those to sectors that will benefit. And if you take away anything from this video, don't wait for Jerome Powell to signal kind of an all clear sign on the economy. By then, some of the biggest gains will be over and the big investors will already have piled in. Same thing is true if you think the economy falls completely apart in 2024. That could happen. So, no matter which direction you think things are heading, the time to position yourself is actually right now. Let me know down in the comments what you think, where you think the economy is going. I always love hearing your opinion and seeing what you think. I'll be back later this week. I hope you have a great day. I'll see you again soon.